Hello and welcome to this special live today from Dubai. And my guests today are both with me here in Dubai. And I want to introduce you today, of course, to the founder and CEO of Utopian Global, Bill Rao, but also to our special guest, Philip Judge, who says that 2021 is poised to be a record-breaking year in more ways than one. Especially when it comes to commodities, when it comes to gold and silver. This is where he is an expert in. So please join us today to welcome to this really special live here, Mr. Philip Judge. He's the founder and the CEO of the Physical Gold Fund and the managing director of Vigilant Capital. And Mr. Judge has over three generations of involvement in precious metals and commodities. He is a great friend. He is certainly a great inspiration. He wrote the book, Stories of a Desk of a Bullion Banker, as well as the documentary Millennium Money. And he is a really, really amazing mind when it comes to all the knowledge involved in the gold and silver market. And I'm really glad to have him here on the call because it's a very rare opportunity to have him here. And Bill, it's great to have you interviewing Philip today. I know you guys have been in a long partnership since many years. I know Philip as well since, gosh, it's now 13, 14 years long. So certainly time, it's just, you sometimes wonder, where does it go? But we have a great year ahead. I'm excited. I know you guys are excited. So let's get started this great conversation.
Well, thank you so much, Claudia. It's really great to be here on this call with Philip Judge. As you said, a great friend and business colleague now since, well, actually really goes back to the early days of 2003 when I was first introduced to Philip. And I had the pleasure of meeting him in Zurich, actually in Switzerland. Maybe it was 2003, could have been 2004. And of course, without going into an extended story about it, he also introduced us to Ryan Messer, who's the CEO of Store. Because Philip was also, being a precious metals person, was also the managing director or CEO of an energy fund back there in 2004, which you were involved in, Claudia. I was involved in, and some of our clients have been involved in also, which go back over 10 years. So it's great to have you on the call, Philip. Before I pass the call over to you, we get into some questions about the precious metals market and the fundamentals of where the world is today. I thought I'd give a little bit of a history on how we came together, just for the people briefly. But primarily, I went to Zurich, Switzerland in 2003. Had the pleasure of meeting Philip. He introduced me to the world of gold and silver. Gold is money. And Philip had been a bullion banker. Now I think, Philip, you've been a bullion banker now for yourself for nearly 3 decades, which is really incredible. And our first conversation was at the Grant Thornton Accountant's office in Zurich, Switzerland. And you said to me, Bill, you asked me what money was. And then you gave an example, of course, and you said throughout history, rulers of empires, royalty and the financial elite always put part of their paper wealth into physical gold. Then you gave a very clear example of doing that. Now, in 2003, it was really just at the beginning of the second major bull run. We had a major bull run from 1971 to 1980, then again from maybe the end of the 90s or 2001, correct me if I'm wrong, up until 2011, where gold peaked at 1,920 and maybe silver was around $50 an ounce. And that ratio of gold and silver, which we'll discuss, Philip, at that time in 2011 was around about 38 ounces of silver to 1 ounce of gold. And here we are today. Many people believe, which started at the end of 2020, a breakout of maybe the third bull run of gold and silver. So maybe, Philip, you want to introduce yourself and just touch on what your thoughts are on that.
Well, thank you, Bill. I trust you can hear me okay. And thanks for the introduction. I'd probably like to start on the 3 generations of the family history. My grandfather was a gold miner in East Africa. And with that came into our family what's really become a long-term understanding of how important precious metals are. So back in the 1920s, after the First World War, and there was all many things going on. We even, we're in this COVID world now, but you can go back to the 1918 Spanish flu and how that impacted the economics in particularly East Africa, for example. So the whole thing that came into my family about the importance of precious metals has really lasted through, almost 100 years now. So I'm very honoured to have the family background history of the precious metals business. And as you said, I've been in this industry 30 years now. We're seeing a lot of change happen. We're living in this COVID world now. And I think that the long-term impacts on COVID and how that's going to impact certainly commodities, but also precious metals specifically, are going to be very, very long-lasting in terms of maybe even up to a decade from now. We'll be seeing the effects of what we've been living through globally for the last 12 months. So that's kind of a bit of background. I started to become more interested in the price action of gold and silver in the 1980s when we were seeing that run up to January 1980 and those price movements and the incredible volatility, which we're starting to see again. Now, we've had price volatility in gold and silver over the last 20, 30 years, but I think since 1980, really until now, we haven't seen, you mentioned the silver gold ratio, for example. We're seeing incredible volatility there. We got over 100 to 1, where it would take 100 ounces of silver to buy an ounce of gold only a few months ago. We're below that now, but still silver's incredibly undervalued compared to its historic value to gold. In other words, how many ounces of silver would it take to buy an ounce of gold? And, I've talked about many times that, back in decades and centuries before would, probably be anywhere from 16 to maybe 20 ounces of silver to buy an ounce of gold. Today, we're living in a completely different world. One of the most interesting things of the world in which we're living right now, which is something we've never really experienced in at least in the last several centuries, is we're in such backwardation. And by that, what I mean when I say backwardation, I'm talking about what's actually coming out of the mines versus what the physical demand is in the market is so completely disconnected that the prices that we've got right now should be completely different. And so what I mean by that is 2, 3, 4 years ago, and particularly before COVID hit, and then we have this beginning of what I believe is a run to physical metal. In other words, people taking delivery of the actual metal itself. What that's done is that's put an incredible pressure on the actual physical supplies, which is typically bars sitting in warehouses in London, Zurich, and other places, even Dubai here, where we all are today. Now, the impact of that moving forward is going to be profound in terms of pricing to market. Then on top of that, you've got a layer on top of that, the fact that many of the mines around the world have been shut down for months. So, close to 9 to 12 months, some of these mines are completely shut down because of COVID. So, so the actual supply coming into the market has, and you can't even get accurate numbers anymore because no one really knows. Then the other thing that's been a creep, and when I say creep, this has been advancing slowly over time, is the regulation over the way metal enters the market for refining. So in other words, 5 years ago, I could go to Africa or South America, and we could buy production gold that is artisanal gold mixed in with mine supply gold, which might be regulated or could be unregulated. People didn't know. And you could buy that gold, you could melt it into doré and ship it to Dubai or Zurich. And so now, through what I believe is a very good and important regulatory environment that we're in terms of, regulating artisanal mine supply, how mines are regulated by their local country environmental ministries and governments and make sure there's no money laundering involved. This is all very good framework. I'm not going against what the framework of what the World Gold Council and the LBMA and others have done. You know, the Swiss Office of Precious Metals and so on. Everyone's been very cohesive in creating a regulatory environment. But the direct impact of that is that it's vastly reduced the supply that's been coming into the market in the past. So by that, I'm talking about the artisanal mining, the illegal mining, all the other stuff. But that said, the overall impact is that the supply of physical metal to the market is vastly reduced at a time we've got, you know, vastly higher demand. And so, and warehouses are getting empty, and, you know, you're getting longer periods for delivery of bars and this kind of thing. So that's a backdrop to where we are today, February 2021. So, yeah.
In fact, Philip, I was just watching, just like a few days ago, David Morgan did a great interview. And, you know, of course, who am I talking about? I think he's a friend of you as well, or colleague. So David Morgan, he said, like, if every American, and that's just America, if every American just basically order 1 ounce of gold, which is what, around $30, there is no silver anymore physically in the market.
Sorry, I just had to find my mute button there. I mean, yeah, absolutely. I mean, silver. So I'm very close to the physical market. I've never really got too involved in the futures and, you know, the platform trading of precious metals, but I've never in my 30 years seen such a tight market in terms of physical supply and, you know, taking delivery and of course on selling that. So I think David is absolutely right. David's very technical in terms of understanding what investor sentiment is, this kind of thing. So I believe his narrative is 100% on the target in terms of, as you say, $30 an ounce. You know, people buy a couple of coffees and donuts and croissants for $30 for their friends. You know, so it doesn't take much for this market to be completely obliterated in terms of taking physical supply. It's physical delivery, I should say. So yeah, we're living in a very unique world, and I think things will continue to be volatile. But I happen to be incredibly bullish in terms of where pricing is going. Now, I'm not going to get on a webinar and say where I think it will be by the end of 2021. However, it's going to be, it has to be much higher than the $27, $28, $30 that we're currently trading in. And of course, we've had the $50 run in the past under very different events, global events that we're in today. So today's completely different to the 80s and the short squeeze of the Hunt brothers and so on. We've got, we're dealing with environmental issues, vastly more complex geopolitical issues globally. Then now we've got this pandemic, which is impacting everything. And, we've got to look at it. And most people understand the impact globally of a global shutdown. But when you start to see the impact of it in countries like Panama, where I have my back office, and you see that like 30-40% of businesses have closed and will never open again. So the impact of that, you're thinking of people that in a country where there's no social security, there's no health benefits, this kind of thing, and you see 30-40% of companies have shut down forever. They're not opening again. So, and then you start putting that into perspective of shipping, like shipping going through the Panama Canal, for example. The slowdown in global trade. You just have to look at the Baltic index of the amount of shipments going through that area. The world is slowing down dramatically, and that's going to have, long-term effects globally. because everything's so interconnected, as we've always talked about. Now, the United States and other countries, first world countries, can sort of help their citizens out by providing benefits and support, given the fact that we're in this global situation. But a vast amount of the global business is not coming from first world countries. So we've got to see what the long-term impacts of this is going to be. We haven't really seen it lead into bank failures yet, or these kind of things, but it's going to hit that point, and in my opinion, quite quickly. So that's just something we have to monitor. But of course, all of this impacts precious metals. Now, obviously, there's also some other competitors in the market to precious metals today, things like Bitcoin and other things, but I'm no expert on that. So, but I'm very bullish moving forward, and I don't think it's out of sight to see silver seriously up this year. Now, obviously, gold is a slower mover, but gold's also impacted with the same issues, where there's mine supply and there's actual physical demand in the market of people wanting to take physical delivery of metal itself, whether it be in coins or bars or whatever. So while I believe silver is always the more active partner between the two metals, and platinum as well is very volatile. If you look at platinum over the last month or so, you'll see platinum is very similar to silver in its volatility. But long-term gold and silver are going to be doing extremely well. Probably gold will move slower because silver relative to gold, as I said a minute ago, had a serious breakdown. In other words, the ratio, silver became very cheap relative to the gold price, and I think we'll see a correction. I can't remember the year right now, but I've seen silver at 30 to 1 in the last decade and a half. So we have to just wait and see what happens. But
so, Philip, what would you suggest our listeners? So we know each other, of course, since many years. I'm always buying gold and silver, no matter what the price. And I believe it was actually you so many years ago who said, look, just get on a savings plan and just, don't really look at it so much, just continue to accumulate. What would you suggest at those prices? Because I get the question all the time. Silver now, of course, being or hit almost $30 now, a little bit dropped down again. Should they still get involved in it? Should they wait? What should they do? And again, we are not advisors. I don't want to advise anything. I'm just saying what I'm doing, and I'm no matter what. I learned that lesson, I believe, from you. It's just I'm accumulating.
Well, I mean, I think at today's prices, accumulation of silver or gold is going to be a lot cheaper than a year from now. So, procrastination is one of those things that people have innately within their system, their wiring. So, well, silver was $20 an ounce two, 3 months ago, whatever, an ounce 30. So I'll wait. But then after that, it's going to be 40. So for me, my whole outlook has always been slow but steady accumulation over time. And I think today, that more than ever, versus stocks, bonds, cash, I think, the precious metals complex is a place to be parking our financial preservation. And again, I'm just, I'm probably moving off topic, but Bill did mention about commodities. Of course, I think agriculture moving forward is a very important place to think about some diversification. That's separate to this conversation today, but that's another thing that people should think of in terms of, whether there's some good ways to be positioned in some food production moving forward, because I really don't know where this world's going right now. Now, it really all hinges in one sense about if we take COVID and then you've got the vaccines, and even if we come into this post-COVID world, we still have not yet seen the beginning of what the impacts of this last 12 months has had on the economies globally. And then you've got to still extrapolate that another 12 months. So even if vaccines are on the market and people accept them, because there's a lot of social pushback on a whole global vaccination program, and all of that's another topic, right? But even so, we're 12 months into this. Lockdowns are now getting more stringent and difficult than they were 12 months ago. And so even if we turn the corner from the actual COVID pandemic, we've still got at least another 12 to 36 months to pull ourselves out of the hole on a global economic and trade level. So again, it just goes back to me saying, well, get some protection strategies in place. And for me, as a little boy, I sat on the lap of my grandfather, who was this wonderful man, and he explained the importance of gold and silver to me as a very, very small boy. And he had an incredible life and, survived the First World War in action, then lived through the whole East Africa revolution and all of these things, and stock market crashes and everything. So for him, when I was a young boy, and he was probably in his 70s at that point, he's saying, Philip, this is a very important thing for you to understand. So I hope that helps.
No, that's really good. And I know Bill wants to talk. I just want to throw something in, sorry, Bill, on that, because remember, of course, those many years going back into Panama, you were actually, you always talked about something is coming, something big is coming, something huge, something never imagined is coming. And you actually built a little farm, so to be self-sustainable, and actually did grow all those trees and stuff like that. But you didn't just because of fun of it, and of course, obviously fun of it and the love of it, but also because you were always saying, you got to be, when the basically things happen, which we don't know what it's going to happen, that you are actually protected. In fact, I see it here in UAE. I was talking to the other day in the lounge to some of the food providers, actually suppliers from Egypt. He was the main manager of the food supply for UAE from Egypt. And it's all about securing food chains, so supply chains. And the UAE is now looking at because of this pandemic, to obviously be self-sustainable through greenhouses and stuff. Because, and again, this is away from gold or silver, but this is, you always have been talking about it. And with the global financial economy and the dollar and all this money printing, so you got to be diversified big time, especially now. So just wanted to add that in here.
And I'll turn over to Bill. I don't want to do all the talking, but in 1996, I started producing what was a feature-length documentary, a 2-hour documentary. It's a very long documentary to watch, but you can search Millennium with a double L, Millennium Money, on YouTube, and you'll find it. And that documentary was decades ahead of its time, in the sense that it was a very pessimistic outlook on where we were heading globally. But to this day, the outlook that was held in that documentary that I wrote and produced is still extremely accurate, and I think more so than ever. Now, at the time, I felt that we could end up in this kind of dire predicament as a result of overstretching economically, whether that be monetary production through fractional reserve banking, which was something I spent a lot of time talking about in that particular documentary, or, you're talking about the interconnection of the food chain, food supply chain, I should say, just-in-time inventory, where, one of the things is, if global shipping and global flights cargo flights shut down, half the world's starving in less than a week. So when we produced the documentary, we were talking about all these interconnected fragilities in the global economy. Again, it was quite a pessimistic outlook, but somewhat accurate, I think. And it didn't come to pass, and we're now, something like, whatever it is, 20 years later. But I still think that we will head into that kind of environment with time. So it's just, again, I don't want to be pessimistic, but there's too many interconnected pieces in the global economy. And I just mentioned 3 or 4. Let's add fractional reserve banking, just-in-time inventory, a global monetary system that revolves around electronic banking, lack of, how can I say this? Like, food production relies on a lot of things nowadays, and certainly, take all the standard fragilities in the food production industry. You've got fuel supply, fertilizer supply, all these other things. So it all adds up to a disaster waiting to happen at some point. And I don't want to be pessimistic. I believe in a glorious future globally, but we've got to believe in that. You've got to see, okay, this is where we are as a global community, and how do we move forward from here? And this is where precious metals comes back into that, because that's the ultimate asset of pure wealth. So
primarily, Philip, you're really seeing the light within the darkness. The precious metals in darkness is really your light. It's your protection. It's your insurance policy, which you actually taught me, which is fantastic. And you spoke about where the world is right now, and there's no clear direction where it's actually heading. But one thing is for sure, if you look at gold has historically been money. And one thing we know for sure, the effect of this fractionalized banking and monetary printing, what's going on in the Federal Reserve, of course, central banks, and of course European banks and many other central banks around the world, is huge monetary expansion, which is great for gold. And of course, on the silver side, well, even though we might see, you said 30 to 40% of companies in Panama will shut down, may never open again. We're going to see this across the world, I believe. But on the other side, we saw a shift in 2020, which has never happened before. We saw negative oil prices occur on the futures contract. So we can see the issues of climate change can change things very, very, very quickly. And this is going to have a huge effect on the silver side. So on the gold side, we're looking at the pricing of gold when it comes to inflationary effects and in the sense of money. But I think on the supply side of silver being an industrial metal, we're going to see the effect of that, I think, over the next 3, 5, 10 years dramatically on the demand supply as an industrial application for electric vehicles, etc. And if we go back to, I want to just touch on briefly, what we're speaking about here is being in the right sector, the right trend at the right time. And I believe what you're saying is, one is the protection what precious metals can offer you as a hedge against such darkness or global economy contraction, which we're experiencing now. And secondly, to be able to win for that, the opportunity that precious metals avails to people around the world. Now, if we go back 1 year ago, gold was around $1,050 an ounce. Silver was under $12. So the exchange rate, it took about 130 ounces of silver to buy 1 ounce of gold. Today, it's contracted to around about 68 ounces of silver to 1 ounce of gold. If we go back to the 2011 high, it was around about maybe 37, 38 ounces of silver to buy 1 ounce of gold. And in 1980, it was around maybe 17 or 18 ounces of silver to buy 1 ounce of gold. So the picture there, what you're really saying, Philip, is we'll find that equilibrium. There's no question about it. We've already seen a huge pullback on the ratio of silver to gold. But gold has already broken its all-time high of 2011. But silver is still probably 40 to 45% off its all-time high of 2011. So silver is very much undervalued in that particular sense. And I think you tie that in with the implications of climate change, the laws changing regarding electric vehicles, and every electric car is going to have an ounce of silver in it, to be quite honest, minimum of an ounce of silver in it. The expansion and demand for silver is going to be exponential over this decade of 2110, 2120 to 2030. So I see that as a great opportunity for people in the world who understand this. And the last point I wanted to make to you, Philip, is that when I first met you in 2003, you said to me, Bill, the rulers of empires, the financially wealthy, financially elite, and of course, royalty, they put part of their wealth. You said maybe only at that time 3 to 5%. And many experts believe maybe 10% of your paper wealth should be in precious metals. So what we're really saving here is the point that Claudio is coming back to. You're not telling people to sell the houses and putting in the precious metals. You're telling them to get on a consistent, savings plan each month where you're converting paper wealth, which is losing value, into real tangible assets such as gold and silver on a monthly basis. Just every month, regardless of the price, you're accumulating precious metals, which is real value. That's the simplicity of it, and it's highly liquid. You can convert it back at any time.
I think, Bill, when we were first working together on developing this strategy of getting people involved in regular savings plans for gold and or silver, of course, I've always been very bullish on silver, as anyone who knows me knows, but we used to say for the cost of a cup of coffee a day, you could get into this savings program. And I mean, it doesn't mean you forsake your morning coffee, but on the other hand, I think it's a disciplinary thing to understand the importance of, for the cost of a cup of coffee a day, I could be in a monthly plan of saving some gold and silver, which I can pass on to my grandchildren or my great-grandchildren in that sense. So I think the points you've raised are incredibly important. I don't see the volatility coming out of the metals, but over time, I think that the metal price is just going to continue to rise, and that's even leaving aside the whole COVID world we're in. It's also just, you know, I touched on these points earlier about how you know, mine production is throttled now because of various different factors, and I'm not saying these are bad. It's just the world we're in, and of course there needs to be a purging in the production side of the industry in terms of, you know, how unregulated mine production comes into the market, you know, and of course we've got, and I'm an environmentalist, and, you know, Claudia touched on the property and stuff like that, and I've seen the impact of cyanide in rivers and the dead fish and the dead birds on the side of rivers, gigantic rivers running out to the ocean in parts of Central America. And this is just through lack of regulation, which is now being adopted, and quickly, because the unregulated mining industry is basically shut down. Then, as I said earlier, we've got all the other impacts, the COVID impacts to large mine production's been shut down in large parts of the world. And so I just think the supply side has been so damaged over the last few years, rightly, but also obviously COVID was never taken into account. So, you know, I sat in a precious metals conference here in Dubai 12 months ago, or probably a little bit earlier than that, but we were talking at that time in the precious metals conference in Dubai about how do we tackle with better regulatory conditions in places like Latin America and Africa, continental Africa, in terms of mine production. And of course, you've got artisanal miners that their livelihoods, their ability to buy food, rice for their family is very dependent on not the cattle they raise, but when they go into the river on the weekend with a dish, a pan, and they pan some gold, but they're not allowed to sell it anymore. Or if the guy that buys it then puts it in with some mine production, then he goes to jail, or he gets fined to the point he just can't, you know. So this has a huge social impact as well. But again, I'm off track. But I see that the supply to demand is this market is completely broken, and it hasn't yet been priced to market. So we'll see more volatility. To your point on silver, I think it will have a serious correction to where we get back to these. I mean, if you look at the last several decades, 30 to 1 is about the level where I think we're going to hit. And if we go below that, then we could be down to 16 to 15 to 1 kind of ratio, silver to gold. In other words, that is to say that the price of silver will be vastly higher relative to gold than what it's been the last couple of decades, apart from a few spikes here and there.
So, I mean, regulation, I mean, the period of time I've known you, Philip, and I won't keep you much longer here, but primarily you've always been a promoter of clean gold. And regulation, there is effects to that to the people on the ground who have to feed their families. If they're unable to mine and dig and actually obtain these minerals, they're not actually feeding their families. So regulation in one sense also means the cost of gold and cost of silver is going to be more expensive, because it means that if people become in alignment with actually good protocol how to mine, it means that the gold prices and silver prices, because the cost of mining is going to increase in one sense. So on a price factor, as an opportunity side, it's good for the people, it's good for the environment. It's also good if you're a buyer and accumulator of gold and silver, it's going to affect the price there as well, I would suggest. The last point I'd like to say, Philip, I remember being in Houston with you and with Claudia was there as well, and some other people, and you were invited to speak there. And a lot of people don't understand that. Just some people are very negative towards maybe gold mining or mineral mining in that respect. Well, as we move into it, as the world trends in this climate changing world to new technologies, the demand on specific minerals is going to actually increase, to be quite honest. I mean, our smartphones, etc., they all contain silver in there, etc. But actually also gold, electric vehicles, which I spoke about. So the point I wanted to make there is if we don't manage the mining side in a sustainable way, I mean, I just came back from Angola last year, and you've been to Africa as well, Philip. And of course, it's the livelihoods of these people. We must work together with these people in a sustainable way so they can feed their families and have prosperity as well. I mean, Africa is the most richest country on planet Earth in minerals, but it's also the poorest when it comes to poverty as well. So it's quite bizarre. So consciously, we need to change a lot. That's another discussion as well. But the point is, long-term gold and silver as monetary protection, as wealth protection. It's a great thing to accumulate over the coming years.
I'd say 100% agree with everything you've just said, 100%. I just want to be a little careful. I'm very, very in support of the global regulatory framework of how mine production comes into the supply side. Obviously, I'm an environmentalist. My daughter runs an environmental foundation, not-for-profit foundation. So that's got to be our number one thought, because it's Mother Earth. That's what sustains us and human life on this planet. And I've seen the devastating impacts of gold and silver production in unregulated environment. What I feel sometimes a little frustrated about, and this is where I have to be careful, is I would like to see that the regulatory bodies, and I'm not going to mention anybody, but I'm just going to say that different global regulatory bodies that have been working on putting together sustainable supply, responsible sourcing, green gold, as you and I have been talking about for years. It would be nice to see that whole framework coming together in a less bureaucratic and a quicker to market way. So I can say I've sat in conferences where the same people get up year after year and they have the same conversation about, this is happening. And I'm going, well, it's not happening quick enough. You know what I'm saying? So that's just a quick comment. I think
it's political, Philip.
It's political, and again, I don't want to get into that, but it's something we have to be aware of. It would be nice to see it moving a lot quicker. And you're right about the way technology is moving so quickly now, and that's super dependent on many metals, but particularly precious metals, both gold and silver. And so, to summarise, I'm incredibly bullish, more than I ever have been in my nearly 35, 40 years in the industry. Very excited about the outlook moving forward for the metals complex. So we just wait and see where we go from here.
That's really great. You have never been more bullish than now. I mean, this is a big statement. All your life is in precious metals, Philip, and of course, 3 generations. So, I mean, this is huge if the people really get the grasp on that. But let's, before we end this broadcast here, let's just answer a couple of questions we have from our audience. If you're up to it. You up to it? All right. So one of the questions is here, how much actually silver is left? This question comes from Aaron, our YouTube watcher here. And you can address this question, how much silver is left?
Well, I'd need to understand the question a bit better. How much silver is left? I mean, we've been mining silver for, at least 10,000 years, or some would say 6 or more thousand years, and none of that necessarily disappears unless it ends up at the bottom of the ocean in a shipwreck or something like that. So it's all there. How much inventory sits in warehouses? I would say it's probably the lowest it's been in my entire career. Who can put numbers to that? Nobody. I mean, just the silver custody that my traditional company does is silver bars sitting in warehouses. Now, that's owned by people, but tomorrow they may sell it and it may go into the market. But it's incredibly difficult to put a number on that. But you can go to certain historical sources and look at, okay, we've mined this over this number of centuries, and therefore somewhere that silver exists to a degree that hasn't been wasted or spent in production of cell phones and batteries and other things, and then how much is reclaimed, and it's impossible to answer the question. But I'm sorry, but I can't answer the question because I don't know.
But the
how
key
much
is
is in vaults of Standard Bank and HSBC and other warehouses in London, let alone Zurich. And I've been many times to the silver warehouses in Cloten in Zurich, and you're literally talking thousands of tons of silver sitting there in bars, and you see it firsthand. But that's not available to market. In other words, if I own a bunch of bars and I don't want to sell them, it doesn't matter. I hope it does. So I hope the watcher sort of appreciates my answer, but it's very difficult to answer the question.
Well, primarily, Philip, you called me maybe 3 or 4 weeks ago and said, Bill, the good delivery bars are silver, 1,000-ounce bars from the refinery in Switzerland, Argo Horizon, which is probably produces 40% or refines 40% of the gold, 30% of the world's gold supply. I don't know the value on silver. They had trouble supplying. So that's really giving you a heads up that supply is difficult at the moment, correct?
Let me just clarify that, is that there was longer than usual timeframes involved. I'm not saying they couldn't supply or whatever. So to be very clear, it's just, again, to say that the market is incredibly tight, more so than it ever has been. So
demand is high.
Demand is high. So yeah, I mean, we did a swap, and that worked out well for me, and I appreciate that. So yeah. And
another question coming here from our good friend, Dr. Adrian Blue. He says, great job, of course, educating the masses. And he's asking, for his listeners and his audience as well, what do you recommend in ownership in gold or silver or other metal as a best move from now?
Well, first of all, Dr. Blue, lovely to hear from you. It's a long time since we've spoken, but we should have a phone chat at some point. So in regards to you and your family, you're a great man, and I've appreciated our friendship over the years. Again, in my opinion, for my personal wealth preservation, I've always preferred silver. And that's my strategy. I think in small denominations, such as what Bill does and yourself, small denominations, collectibles, all these kind of things rather than big bars, because we've always had the discussion about, if you've got a 400-ounce, bar of gold and you've got to saw off a bit and try to weigh it and that sort of thing. So I've always liked that as well, which is something I think that's been very important in your strategy together. And so I just think...
Sorry, I didn't want to cut you. I just have 2 more questions, and then I know, Philip, I think you need to hit the plane, right, today? Good. One more from Elistios. He's asking here, considering the current moves targeting the hedge fund that we are shorting silver, will this have a good potential to reduce the current silver suppression and help with the price?
I mean, the financial markets that are in paper products have always been the arch enemy of the precious metals, and particularly in the physical form. Obviously, there's derivative and structured products that involve precious metals ownership, but certainly in the context of hedge funds and others, they no friend of gold and silver. So I think that ultimately it's a game that they can't win. And the more people look to the physical metals, which we've seen in this last 12 months, very, very clearly. You know, I had dinner with Bill in Dubai a few nights ago, and we spoke about this. I mean, I've seen this huge mental shift from people from 12, 18 months ago, kind of disinterested, you know, maybe I'll buy a condo down in South Florida or whatever, or something like that. And now they wanted to buy gold and silver again, and they haven't thought about it since the last run we had, and or at least the last time we thought we were going to a recession or depression. So I think that the Wall Street agenda against metals can never ultimately win. I mean, they might survive to fight another day, but long term, you know, it's unwinnable war, particularly if we continue to be in now like this panic mode of the Great Depression, where, you know, and I think we're heading into a Great Depression, probably worse than the 1930s. So let's wait and see. But and I hope not, but certainly that's going to have long-term impact still.
Thank you, Philip. And the last question comes from our good friend Bill Wilmot from the UK, and he's asking, any stats on the supply and consumption side for silver? Are we consuming more in manufacturing than it's actually mined annually?
Yes, absolutely. I just can't give numbers off the top of my head at the moment. I've got all the spreadsheets and everything else to actually quote the exact numbers, but I'm not going to remember right now. But yes, I mean, the annual consumption of physical metal, both in gold and silver, is way more than what's coming out of mines. So we've been relying in the last 10 years of dishoarding of stored precious metals. In other words, using up inventories as sellers have come into the market. They've sold their metals, their inventories, and that's been used in fabrication of jewelry, or other people buying physical metal for storage purposes, for protection purposes. So the answer to the question is the supply-demand gap is huge. It's huge. Just in gold, it's over double. So if you take annual demand, and we don't really have accurate numbers for 2020 yet, but if you go back 2018, 2019, you look at mine supply entering the market, and this is before we got into the last stage of the regulatory creep in the informal mining globally, we were running 50% of demand. So now numbers vary, and you can do Googles on this and get different people's opinions, you know, whether it be, you know, World Gold Council or whatever, but different people have different numbers. But yeah, the supply to demand gap is huge, and it's growing. And as I said, I can't quote numbers from 2020 and 2021, but we're living in a scary time in terms of production. And this to the other point is, for example, I've spent a bit of time down in Ecuador. With this, I'll finish because I do talk a lot, but you look at what happens in Ecuador is you've got a lot of licensed mining companies that produce a concentrate, which has got a very high gold cut, but it also has copper, zinc, you know, obviously a bit of lead and silver. And it's got Ecuador has a pretty high silver cut. Now, this is on the west coast, so they ship this in a concentrate, which is basically they crush the ore, they filter out the rock, and they keep the minerals in a sludge, and they put it in trucks, ship it up to Guayaquil, and then they ship it over to China. The miners get paid for the gold. The Chinese don't pay anything for anything else. the silver, the lead, the copper, nothing. So the miners get paid for the gold production and nothing for the silver and the rest of the stuff. And then we don't know what happens to that silver, nor do we even really know how much silver is there. So this is why it's really hard to kind of really answer the question, because you just don't know what's coming to market, but we do know it's way less than what the actual demand of physical supply is. So
that's really interesting, Philip. Just on the comment, you don't really know how many grams of silver to a gram of gold per ton. Would it be historically, is that roughly 12 to 1 in mining?
It depends on the zone and the region. So that will vary greatly. I mean, a lot of gold mine production is very high gold cut versus the other minerals that are in there. That's a good question for our friend Marco in Agua Rice, because he's going to say, well, you know, for example, Latin America traditionally has a very high silver cut versus gold, to gold, I should say. So in other words, it can be anywhere from 12 to 15, 18% of the gold is in silver. Africa is a lot lower. The silver cut is a lot lower. So it just really depends. It's a difficult question. But in both metals, just to summarize, and with this I shall end, is that the demand in the physical market for both metals, including the others, the palladium group, will continue to outstrip supply in the foreseeable future, without taking into account COVID and its related effects on the global economy. So thank you.
Thank you, Philip. This was a really great call. Thank you, Bill. I mean, I love to hear the information. I know our viewers, I see the comments here on the different social media, they love it. And say, great call, very insightful. Indeed it is. Now, I would really love to extend this eventually further. And I would so much love going into some environmental stuff there, because I know, Philip, this is your passion. I know this is your beautiful daughter's passion. Maybe we can on a call and just talk about her foundation and what she is doing there, because, you know, we all are about that. And so often it gets confused with like, okay, you guys in gold, you're in silver, that's bad, and so on. So, you know, I would really love to talk about that, have you on a further discussion and another day, obviously. And so again, thank you. And thank you, Bill, of course. And I know Bill is going to do the closing words here on this call tonight or today.
Thank you very much.
Thank you, Claudia. Well, Philip, as always, is a great friend. It's a pleasure to be able to meet you in person again. We hadn't seen each other for a year due to the current global situation. To be safe and well, safe travels back home to Panama from Dubai, and blessings to you. And we look forward to having another catching up in person and another call. So thank you.
Yeah, thank you very much, Bill and Claudia. It's been a delight, and it's been way too long since we did a group call. So I hope I didn't talk too much. The other thing is, I would absolutely love a chance to have Elise on a call just to discuss the different initiatives that are happening and this growing awareness in Central America, at least, and particularly amongst the local indigenous people that are now starting to understand that, you know, the environment in which they live has been, you know, severely impacted by human activity. So that would be a wonderful thing to do at some point. But thank you both for the invitation, and I appreciate it greatly.
Let's do it.
Let's do it. Thank you.
Thank you.
Okay. Thank you.